Well, hello, everyone. Thank you for joining us. Good morning to those of you reporting in from the Pacific or East Coast of the Americas. Good afternoon for those calling in from Ireland or the UK, as well as continental Europe. And late afternoon and evening for those who are from the Middle East or Africa or even parts of Asia. Welcome on this day. We're very pleased to be speaking to all of you about the Emerald Isle, the greatness of Ireland and all it has to offer, and in particularly referencing the IDLF as the means in which one could become a resident there. I'm very pleased to introduce you now to our distinguished panelists who will be speaking on behalf of IDLF. First and foremost, Andrew Parrish, who is the Chief Commercial Officer. Joining him will be one of the flagship investment portfolio businesses that the IDLF has invested in, a gentleman by the name of Michael Magner. Also, if one makes that decision to become a permanent resident and to settle in Ireland, one should have the advice of our third guest, David Clancy, who specializes on both inbound and outbound taxation from an Irish perspective. So we're very pleased to have David with us as well. So without further ado, I would like now to hand over the presentation to Andrew Parrish, the Chief Commercial Officer of the Irish Diaspora Loan Fund, the IDLF, who will tell us more about the good works that they're doing and how it's a vehicle for our clients and for your clients to become a resident of Ireland. Andrew, welcome.
Hi, thanks very much, Eric. It's a pleasure to be here today and to welcome guests from all over the world. It's always exciting, and it's a privilege for us to explain a little bit about Ireland, about the Immigrant Investor Programme and the opportunity that it provides to overseas investors seeking a new future in Ireland, and to talk a little bit about what the Irish Diaspora Loan Fund does. Delighted to be joined by some colleagues today, as Eric has mentioned. Michael, who's one of our hosts or one of our targeted investments, and also David, who can provide the right kind of tax advice. Just before I get into the detail, I'd like to share with you a message from our director, one of the directors of IDLF, Mr. John Bruton, who's a former Taoiseach or former Prime Minister of Ireland, to welcome you all to this seminar today.
I'm delighted to welcome you to this seminar about Ireland, a country in which you're contemplating investing. Ireland is a prosperous country, recovering very rapidly from COVID, very high rates of growth, I think the highest in the European Union at the present time. Ireland is the only English-speaking member of the European Union, enjoys the common law system, which we inherited from Britain. We have also, I think, a very independent court system which protects the rights of investors in Ireland. And we are a country that is at the same time very open to new ideas, very flexible in our approach to life, and welcoming of people from different backgrounds. It could be said, in fact, that we're a very curious people. We like to know about other people and where they're from. So be ready to be asked questions when you come to Ireland, just as much as the questions you were asking yourself. So at this stage, I hope that you enjoy the seminar, and I want to assure you that IDLF is at your disposal to assist you in your decision making over the future. Thank you very much.
Great, so I hope you enjoyed that short video welcome from John Bruton and some scenes from Ireland, which shows what a beautiful country this is. It's my pleasure now to talk you through the IIP and IDLF. But to begin with, it's always worth reminding ourselves of where Ireland is. We assume in Ireland, of course, that we are at the centre of the known universe, but it's worth reminding people that we are an island on the west of Europe. But for a little small island, we do pack a bit of a punch, and we'll see a little bit during the course of the conversation today around the extent of foreign direct investment into Ireland by some of the world's top technology companies. It's also a very beautiful country, but it's also March, and this is the month that we celebrate our national saint, St. Patrick. And whilst this started out as a holy day of recognition of the patron saint of Ireland, in truth, St. Patrick's Day has now become a celebration of Ireland, the Irish culture, Irish music. And as you can see, the greatest marketing coup in the world is that on the 17th of March, all of the world turns green for St. Patrick's Day. So for a tiny little island on the west coast of Europe, we certainly have made our presence felt around the world. And that really speaks to why we're here today. For many generations has been a nation of migrants, and typically we have emigrated from Ireland to some of these beautiful locations that you can see here on this slide. And now the tide has turned, and Ireland is being recognized for its vibrant economy, for the beautiful landscape, the stable democracy, access to Europe, employment opportunities. We're now seeing people coming to Ireland, and I guess Ireland has earned the reputation for being the island of the welcomes, and of course we would welcome people coming to Ireland, given that we have benefited from other countries welcoming us over many generations. So why do people choose to come to Ireland? First is, we are a fully committed member of the European Union. We have benefited from that membership and continue to be fully supportive of that. We are, despite the challenges of a financial crisis 10 years ago and COVID more recently, we continue to be the fastest growing economy in Europe and one of the most competitive economies in the world. We attract very significant foreign direct investment. You've all heard, I'm sure, that all of the top technology, medical device and pharmaceutical companies are located here in Ireland. And in truth, and I'm sure David, our tax specialist, will confirm later, they may have been attracted initially due to a favourable business regime in Ireland. The truth that these companies are here now and continue to invest in Ireland is because they can access talent and they can access the European market. So as a consequence, Dublin, Cork, the major cities in Ireland have become very vibrant, very diverse, very multicultural, and actually very wealthy because of the employment that's created by these companies. The fact that we speak a version of the English language is often very helpful, and for people who are looking to migrate that come from English-speaking countries, that is, I suppose, it reduces a very significant barrier for people considering a second home. And I suppose the final reason that people are motivated to come to Ireland is for their children access school system and the university system, and Ireland's education system in general is recognised as being one of the best in the world. Just to describe very briefly the programme, the IIP. So this provides benefit to investors who invest in Ireland. It provides the benefit of residency, the ability to live in Ireland, establish a business, work here, effectively do anything in Ireland that an Irish citizen can do except hold an Irish passport. It's become a very attractive kind of second option for people because of the very flexible requirements to hold on to this permission. Specifically, you only need to come to Ireland for 1 day a calendar year in order to retain that residency requirement. And this would be quite different to what you have to spend months or more every year to be here. Investors, the three main criteria are they have to be, as you would expect, of good character with a demonstrable clear criminal record. You need to have a net worth of over 2 million euros and the ability to invest 1 million euros into the recognised project. The applicants themselves get the stamp 4 visa, as do their spouse, as do their dependent children up to 24 years of age if they're in full-time education. So it's a very useful scheme for families, particularly those who are looking maybe to have their children educated here. Importantly, it is considered as a reckonable residence permission, which means that if you are living in Ireland for a period of 5 years, you can then qualify to apply for citizenship naturalisation and actually become a citizen of Ireland. And obviously the Irish passport then is recognised as a very powerful passport and gives you the ability to travel to over 180 countries visa-free. So in terms of the entry criteria for the investor, as I mentioned, you have to demonstrate a net wealth of at least €2 million. That can be in cash, it can be in property, it can be in investments, it can be in pension accounts. You do need to prove that. If it's property, you do need a valuation certificate, etc. As you and then the application process is relatively straightforward. Approval times are about 6 to 9 months. Working with our partners in Latitude, IDLF can help to prepare all of the information and the file and lodge the application directly with the government. There are a couple of fees to be aware of outside of the normal professional fees. There is a due diligence requirement, a report for a due diligence, which is usually about €3,000, and then an application fee to the government of €1,500. There are 4 options available to people who are considering the IIP. One is to make a charitable donation of €500,000. Another is to invest €2 million into a stock market listed real estate investment trust. Third option is to invest €1 million into an enterprise investment, which is typically a property development project. And then the final option is to invest €1 million into an investment fund that's regulated and authorised by the Central Bank of Ireland. And that is exactly what IDLF is. And in fact, IDLF was the first investment fund set up exclusively for the purposes of the IIP and regulated by the Central Bank of Ireland. So the fact that we are a central bank regulated fund provides the advantage that we are pre-approved for the purposes of the IIP. In other applications, you actually have to present a business plan to accompany your own application. But with a regulated investment fund, it is simply a tick box on the application form, which removes quite a lot of the burden on the application. IDLF was established and sits as part of a family of financial services business that sit within the TACSBAC group of companies, which was established by our founder, Mr. Terry Clune, who is one of Ireland's most successful financial services entrepreneurs and EY Entrepreneur of the Year. It is structured as a senior secured debt fund, which means that as we provide funding to the likes of Manor, who you'll see later in the program, all of the loans that we put out are asset-backed and are typically secured against assets worth at least 30% more than the amount of the loan that we have provided. And the investment is returned after a maximum of 5 years. And I say a maximum because the fund is structured as a 5-year closed fund, which means that it must give the investors their money back after 5 years. But it means if you don't invest day one of the fund opening, you're investing less than 5 years. So if you were to invest today, for example, you would have a 5-year hold in the fund. If you go through the application process and the approval process, it could be 12 months from today, which means you should only invest for 4 years. So the maximum investment is for 5 years. To give you a sense of who's in charge of the fund, John Bruton, who you saw earlier in the video, is a very distinguished former politician in Ireland. He was former Prime Minister and has served as the European Ambassador to the United States, has also served as the chairman of the National Financial Services Centre in Dublin, and now sits on a number of corporate boards. Richard Horlick is former head of investments with Schroders plc and CEO of Fidelity Bank, so very significant financial and banking background. Joanna Murphy, who's our CEO and also CEO of taxback.com, and Terry Clune, who's our chairman and the founder of the TACSBAC group of companies. So as I mentioned, the fund only lends money. So we don't speculate by providing equity to businesses. We lend specifically to sectors of the Irish economy that are in line with the government's requirements from the IIP. And specifically, we're looking at the ability to support businesses to enable them to sustain employment or to generate new jobs. So we can lend to hotels and to nursing homes and to the developers of social and affordable housing schemes. And we always secure any funding that we provide to these businesses against the assets of the business. And this really, comes from the two key objectives of the fund. The first being to protect investor funds, follow a very conservative low-risk strategy. And the second objective is to provide useful finance to support Irish-owned businesses to help them increase employment over the lifetime of the fund. So it's a very simple strategy. In fact, we operate in the same way as a small bank would operate, where we pool the assets of the investor's capital, and then we provide mortgages to businesses in order to help them to grow. Our approach is very much to work very closely with partners like Latitude to provide excellent customer service. We have worked with over 100 families on this, many of them from the US, many from South Africa, many from Hong Kong. We have 100% approval track record, so anybody that works with us has secured their residency status in Ireland. But we also act beyond, helping with the application to the IIP. We do kind of see ourselves as a concierge service, helping people as they explore Ireland, very often for the first time, provide practical information in terms of where to find somewhere to live, how to get their children into school. So we really do kind of provide that sort of trusted guide through the application process. But once people have invested into the IDLF fund, we continue to support them thereafter. Pre-COVID, in our office in Dublin city centre, where investors can mingle to meet each other. They can be introduced to business opportunities if that's their desire, or really anything that we can do to help them to integrate into Irish society. So I've mentioned some of the reasons why people consider Ireland, but these are some of the reasons that our clients have given us in a customer survey that we completed before Christmas. So you can see, exactly the kind of reasons that I mentioned earlier are the reasons that our clients have provided to us. And why have they invested in us? Again, it reflects our strategy, which is our clients recognize that their capital is safe. There's a sense of security. By virtue of the fact that we're a regulated entity, everything is transparent. And provides a trustworthy opportunity for them to invest in order to secure their residency status. Here's a testimonial from one of our clients from the US, and again speaks very much to language being a priority, loved the country, enjoyed the people that were here, found the service that we provide full, and I think that's really, I suppose, the best testimonial that we can have is a happy customer. Before I finish, it's always useful, we're still grappling with COVID, just to remark that Ireland, despite it all, has performed incredibly well during COVID. In fact, today, I hear on the news that we are pretty much dropping all COVID-related restrictions here in Ireland. Annenberg, as you can see in this article, voted Ireland as the most COVID-resilient country in the world. And partly that's to do with the extent of vaccinations in Ireland, which is now up to 95%, but also the fact that the government has performed well, I think, in providing the right kind of advice and supports in order to get Ireland through this crisis over the last couple of years. Here's a glimpse of some of the properties that we have provided funding to. Michael Magner from the Vienna Woods Hotel will talk to you specifically about his property and what we have done to help him recently. And to summarize, of course, we believe Ireland's a great country to live in and to work in. It's also a good country to invest in at a good time. The economy is booming. The IIP is recognised as a very robust, useful permission for people looking to secure a future in Ireland. IDLF offers a safe, secure, conservative, reputable option for people considering the programme. So with that, we're always very happy to talk to you directly, very happy to engage through our valued partners in Latitude, and we look forward to talking to you all soon. And with that, I'd like to introduce Michael Magner, who will pick up from me to talk about what he's doing in his wonderful property, the Vienna Woods Hotel. Over to you, Michael.
Good afternoon, everybody. Thank you so much, Andrew, for that introduction. It's a pleasure to be with you all today from beautiful sunny Ireland at the start of March. And it's my pleasure to have the opportunity to speak and share my experiences of IDLF and of course be invited on here today as a guest of Latitude also. My name is Michael Magner, and I am the owner, along with my family, of the 4-star Cork's Vienna Woods Hotel. We're located in Cork in Ireland, and my journey into the hotel industry started when I was 15 years of age, wanting to do hotel management, supported by my family, went on to study a career, and eventually in 2006 with my business partner bought the Cork's Vienna Woods Hotel just before the economic, I suppose, calamity of the global recession at that time. Navigated our way through the recession through very tough and difficult times, but had great support from our stakeholders at the time. And I suppose they saw in us something that we could deliver and bring our business, keep our doors open and look after our customers in the business that we're in. We are, as I mentioned, in Cork City, and we are a 4-star country house property. Our property sits on 22 acres of wonderful grounds, 10 minutes from Cork City Centre. If you're not familiar with Ireland, Cork is in the south of the country, and it's Ireland's second largest city. Ireland itself is a very prosperous country, and I suppose a wonderful educated workforce, and we are a safe and neutral nation. I suppose one of the key things as well that makes Ireland very attractive for overseas investors is the fact that we're well regulated by a very, I suppose, thorough government and banking sector and financial regulator. And also, as well as that, we've an educated workforce as well in our industry. So in Ireland, so it makes us, I suppose, a very attractive place in which to do business. Taking you through my journey, me and my family, after, as I said, we bought the hotel in 2006, we navigated through some very difficult times. And in 2019, my business partner and I discussed about the next steps for our future. I have 3 children, my business partner have 3 children. And for any of you out there, I suppose, looking at investments into the future, we're always doing it for a reason, and lots of the times those reasons are about the next generation and putting in place the stepping stones and the future for our next generation. And for me, it was no different. So my business partner and I had a conversation, and it was decided that if the price was right, I would buy out his shares, and my family and I would take complete ownership of the hotel. So we did that in 2019, and as a stepping stone to, I suppose, securing ownership, we had to buy out shareholding. We spent a year looking at how we could allow our business breathe and develop and grow the potential that was in the business. So subsequently then, in doing my research, I'm very involved with the Irish Hotels Federation. The Irish Hotels Federation is the lobbying body representing the entire hotel sector here in Ireland. And at the time, our national president had been made aware of the IDLF. And what we learned about the IDLF back in 2019 is that it was a fund that was put together, supported by the Government of Ireland and various government departments, such as the Department of Justice and the Department of Finance in Ireland. So in that context, we knew that the IDLF then was a real serious player in the market in Ireland. In that context, then I was introduced to the team at IDLF through the Hotels Federation, initially Andrew Parish, and then Andrew's colleagues, Joanna and Dermot McHugh, and we set about working together to see how IDLF could help me and the vision for my business and support it into the future. So in April of 2020, just about as the pandemic was just about to take off, IDLF backed me and my family, and our business has never, even through a pandemic, believe it or not, navigated waters so choppy to come out of the other side vibrant, healthy, and with a very, I suppose, defined and strategic future for our business. And that's because of the IDLF. As mentioned by one of the previous speakers and in the introduction that Andrew shared with you today, the board of the IDLF is made up of some very well and respected business people and our previous Prime Minister of Ireland, John Bruton. And that gave me comfort as well in terms of doing business with IDLF about that in sharing, I suppose, the future of my business and putting the funding that they are securing funding for my business, that I knew that I'd be protected and minded, but also the funds that are placed into my business, I know they have to go back and they're protected and minded as well for you. So in working with IDLF, I shared with them my long-term vision for my business. We currently have 46 guest rooms at our hotel, but we do a significant number of weddings each year. Food and beverage is a significant part of our business, along with conference meetings and events. And we simply did not have enough enough rooms. And if you're familiar with any business model in the world, particularly with relation to hotels, hotels need bedrooms in order to get to their bottom line and to make the businesses long-term viable, and to navigate through choppy times as well, because of course hotels are subject to a lot of external factors that can have an impact on business. So you take a 5-year view when you look at modeling in terms of hotels. So with that in mind, we shared our plans with IDLF, and IDLF backed us in terms of said, yes, go ahead and do this, develop your business. We're here to support you. We're commercially minded. We can see the business sense that it makes. It backs family-owned businesses. It backs people that can work with I suppose, navigating the business, and of course, developing it, as I said, into the future as well. So in April of 2020, we were fortunate to secure planning for an additional 44 rooms at our hotel, along with expanded pre-reception space for events, and in the future a spa as well that's in the planning that we secured. And I'm happy to say in November of last year, 2021, we broke ground, and our first phase of our development, the pre-reception room, along with the additional 22 bedrooms that will bring us up to almost 70 rooms then on the grounds of the hotel, will come on stream and live from July of this year. Nothing or none of this could have been possible without IDLF. And I can assure you of that, because in terms of the complications around trying to navigate the pandemic, along with, I suppose, seeing a business and commercially minded business proposition, it was IDLF that made that and made that happen. And through prudent mechanisms as well. I mean, it wasn't a case in point where IDLF just take the investors' money and just give it to me. I had to meet certain criteria and covenants, which I'm happy to have done, but also in sharing my direction and my vision for my business. IDLF have understood how to model my business to ensure that it's successful, and it continues to be successful as well. In Ireland, typical hotel sizes are an average of 100 bedrooms. So if you're slightly below it, the 70 mark, which I'll be, with an additional 22 rooms, again coming beyond that into the future, I'll be at the average size of hotel within Ireland as well. Ireland is a great place to live in terms of work-life balance. We have a temperate climate. We get rain, but we also get sun. And today, Thursday, as I look out my window, I can see the sun shining in, and it's a typical spring day here as well. I mentioned that there's a significant and well-respected educated workforce here in Ireland, but that education and that workforce comes from the education systems we have in our country. And in that context, I think it means that our population are reasonable. We're reasonably thinking, and because we're an island nation as well, we've always had to be creative about how we do things to make our country competitive and I suppose internationally there on the international stage as well, to be able to compete also. For me, I see myself working with the IDLF into the future, along with Andrew and Joanna and Dermot and Michael and the team there, and they've created a future for me. I'm 47 years of age, and I'm in hotels since I was 15 years of age, and then going on to college, I worked part-time in hotels as well. And this is my business, it's my future. And I'm creating that future, hopefully, for my children. I have 3 sons, and my wife tells them every day, are you sure? She's an accountant. Are you sure you don't want to go and become an accountant? And they're starting to dip their toes into the hotel business as well. And we're creating something for the future. I'm a custodian for the investors that work with IDLF and through other, I suppose, options to come into Ireland. I'm grateful for the support that IDLF have given me. IDLF have been kind, they've respected me, they've taken and listened to me and my vision for my business, and they've encouraged me as well, but they've also challenged me with other business ideas as well, because remember, they have an interest to make sure that their investors' funds are looked after as well, and I can assure you they're in safe hands with IDLF, and they're in safe hands with me. And thank you to the investors, and I mean, you may be an investor at some time in the future, regardless of what part of the world you're in, and my door is always open. I mentioned this to Andrew and to Dermot many times. If you are visiting Ireland, please pick up the phone, ask for me. My name is Michael Magner, and if I'm not there to take the call, I will call you back, and have a look at our website. It's viennawoodshotel.com, and learn a bit more about my hotel and what IDLF have done for me. Thank you for your time, and I look forward to any questions you might have.
Well, thank you very much, Michael, it was really interesting to hear your story and your connection to the IDLF. It's great to see success stories like this, and this is really what these funds and what this immigrant investor program was really all about. And I'm really glad that it's worked in your favor. Best of luck with your future commercial endeavors and with the Vienna Woods Hotel. So thank you again. Now we're going to move over and enter into the world of taxation. Always very important when considering residency into a new country, particularly if one wishes to establish tax residency by spending typically over 6 months or more. David Clancy, who heads his firm Clancy and Associates, is based out of Dublin, has assisted many private clients, international private clients, in their move into Ireland, and is here to speak to us about the virtues of Irish taxation, which the world knows very well, or has heard about on the corporate side of things. But even for my sake, I'm interested in hearing from David as to what Ireland offers for the private client. So over to you, David. Welcome.
Thank you so much, Eric. It's my pleasure to speak to you today. What I want to cover in the presentation is I want to give you an overview in relation to Irish taxation. And in particular, I want to consider the tax opportunities in Ireland for individuals who are domiciled outside of Ireland. So the scope of Irish income tax is dependent on three defined concepts, right? Okay, the concept of residence, the concept of ordinary residence, and domicile. So in the Republic of Ireland, we have a calendar year, 1 January, 31st December, and an individual's tax resident status is dependent on the amount of time they spend in Ireland, and solely on the amount of time that they spend in the Republic of Ireland. So when you're looking at tax residence in terms of establishing tax residence in the Republic of Ireland, if you spend more than 183 days in a tax year in the Republic of Ireland, you're considered tax resident. We also have what we refer to as a look back rule. So when you look at 2 years back to back, right, and you aggregate the amount of days between the tax year and the previous tax year, if an individual spends more than 280 days in aggregate between the two tax years, right, the individual is considered tax resident. So say, for example, you're looking at somebody in 2022 and they only spend 160 days in the Republic of Ireland in 2022. Obviously, they're not caught by the 183-day test, right? It's less days than the 183. But if you look at the number of days that they spent in Ireland in 2021, and they've spent 140 days, in aggregate, they've spent 300 days, breaches the 280-day limit, and therefore is considered tax resident in Ireland in 2022. In relation to a definition of a day is any part of a day. So we've had lots of sword fencing over the years. We used to have a midnight Cinderella rule, okay, but now a day, basically any part of a day is aggregated in terms of counting the days. Any year that you spend less than 30 days in the Republic of Ireland is not aggregated for tax purposes, okay? So if, for example, in 2021, I had spent 300 days, and in 2022, I only spent 20 days on aggregate, right, the 320, because I've spent less than 30 days in 22, is not aggregated. In addition to the 183 and the 280-day test, there is also the ability to elect to be tax resident in the Republic of Ireland. So if you haven't met the number of days under the 183 or the 280 in aggregate, you can elect, right, where you satisfy the revenue, the Irish revenue, that you've come with the intention in such circumstances that you will be tax resident in the following tax year. So again, you know, I probably had the first case in the Republic of Ireland where this became an issue, and the types of things in terms of buying a property, putting down roots here, right, were all basically indicative of this election to be tax resident in the Republic of Ireland. So again, one of the key basically areas in relation to this tax residence is it is basically very defined, right, in the legislation, and you know, it's simply this 183 or 280-day test. The second driver of Irish tax is the concept of ordinary residence. So an individual becomes ordinary resident in the Republic of Ireland after 3 consecutive years of tax residence and doesn't lose ordinary resident status until 3 years non-resident back to back. Okay. The third driver, so whilst residence and ordinary residence is defined in the Irish tax code, domicile is not, right? Domicile is a term that has evolved in private international law, right? Okay. And again, you know, if you were looking at kind of a short, snappy, basically definition as to what is domicile, right? Domicile is the country, right, which is considered to be the person's permanent home, okay? So it's possible to categorize domicile into a number of different categories. We all typically acquire the domicile of our father at birth, right, okay? If we're a marital child, if we're a non-marital child, our father dies before we're born, we acquire it from mum, right, okay? It is possible to acquire a domicile of choice where you go and reside in a new jurisdiction with the intention of permanence, okay? So reside in a new jurisdiction with the intention of permanence. So this is kind of heavy lifting, right? Where, you know, you have to show that you're going to be there forever and a day in the new jurisdiction. So the types of things that the courts and we look at in relation to this area would be the likes of buying burial grounds, life membership of clubs, citizenship, making your will, you know, moving your medical and dental records, what you do and what you say, right? Really important. And again, domicile dependence can be in relation to minors. So essentially a minor acquires the domicile of their parent and it shadows it. So if somebody changes, if a parent changes their domicile when the kid is less than 18, right, the child basically shadows that domicile. So nobody can be without domicile, you can only have one domicile, and it's very sticky, very adhesive, and very difficult to get rid of. So even if you were in Ireland for a number of years, you came from, say, New Jersey, right, okay, and you come into the Republic of Ireland and you're here for, you know, a number of years, that doesn't necessarily mean basically that you've acquired an Irish domicile, okay? You know, you still have that New Jersey domicile and it's very sticky, very adhesive, and very difficult to get rid of, okay? So when you get your head around those key drivers of Irish tax, what are the consequences? So from an Irish tax point of view, for somebody like me who's resident and Irish domiciled, I'm liable on my worldwide income, okay? For people who are resident but not domiciled, say my friend who's come in from New Jersey, for example, right? Resident by virtue of the amount of time that they spend in the Republic of Ireland, but domiciled in New Jersey. They are liable to Irish income tax, right, on Irish income, and only other income insofar as remitted into the Republic of Ireland. Okay, so what I mean by remitted is brought into the Republic of Ireland. So for example, if they have a property in Weehawken, New Jersey, right, okay, and they don't remit the rental income into the Republic of Ireland, it's not subject to Irish tax, okay? Irish duties of employment always liable to Irish taxation, but you've got this key concept for somebody who's resident but not domiciled. They are liable on this remittance basis. Only if they bring the money in. Don't bring the money in, not subject to Irish tax. If you're non-resident, you're only liable on Irish source income. So again, if you had somebody abroad who is looking at their Irish tax position, it's only on the likes of Irish rental income, you know, a source in the Republic of Ireland. So kind of there's a whole piece of planning, right, in relation to people coming to the Republic of Ireland to avail of this very advantageous tax position in terms of the remittance basis. So at first base, right, don't bring it in, not subject to Irish income tax. One of the significant things as well is that if you have accumulated capital, right, that you've saved up before coming to the Republic of Ireland, you can bring that capital into the Republic of Ireland without an exposure to Irish income tax. So any savings you have before coming to the Republic of Ireland can be remitted into the Republic of Ireland without an exposure to Irish income tax. And again, you know, just from a technical point of view, you have to be careful in terms of avoiding mixed funds. So for example, if I had a deposit account and there was deposit interest being paid into the account, and I remit monies from that capital and income, the capital saved and the interest accrued in the account, right? Irish revenue deemed the first remittance to be a remittance of the income portion of the account. So again, you have to, planning to be done to ensure that you set up separate capital accounts and income accounts. You only remit from the capital account, which means you don't have an exposure to Irish income tax. Again, for the year that you come to the Republic of Ireland, planning there, any employment income that you earn before coming to the Republic of Ireland is not liable to Irish tax in the year you come, right, okay? And similarly on the way out, right, in the year you leave the Republic of Ireland, any employment income that you earn after leaving the Republic of Ireland is not liable to Irish income tax. So again, Ireland has an extensive, basically, number of agreements, right, with countries around the world, right, in terms of, so we've got extensive double tax agreements, okay? So again, this is key in relation to people coming from foreign jurisdictions to understand the interrelationship between the foreign country and the Republic of Ireland. So again, with double tax agreements, they're both to prevent double taxation. They're also to prevent fiscal evasion, right? Okay, so again, you see a lot of, administration in terms of sign off to say you're resident in one particular country. And really what it's trying to regulate is who has primary taxation rights. In the Republic of Ireland, the double tax agreements override domestic legislation. So they're of higher legal power than our domestic law. So again, why do you have them? So say, for example, I've got a property in London and I've got rental income coming off the property. The UK want to tax property in its own backyard. Ireland wants to tax me on my worldwide income, okay? So again, right, if there was not a double tax agreement in place, you'd have the UK imposing tax and you'd have Ireland imposing tax. So what the double tax agreement seeks to do is either exempt income in one country, right, and only tax it in one country, or give a credit, right? So you pay tax on both jurisdictions and you get a credit, right, in one country for the tax paid in the other, okay? So again, with rental income, for example, in that case I have with the UK, my UK rental can be subject to UK tax. It will also be subject to tax in the Republic of Ireland, but I get a credit in the Republic of Ireland for the tax that I pay in the UK. With the likes of interest income, it's done by way of exemption. So again, with double tax agreements, one of the key drivers of the double tax is the tiebreaker clause, okay? So the tiebreaker is if you happen to be tax resident, right, in two jurisdictions, who's got primary taxation rights? So again, chronological list of tests to establish who's got primary taxation rights, okay? So I've got a permanent home one jurisdiction and none in the other, right? Essentially, where I have my permanent home, they have primary taxation rights. So again, the double tax agreement is critical, right, to understand in relation to people coming to the Republic of Ireland and the implications, right, of the double tax agreement between Ireland and that overseas country. So in relation to capital gains tax, right, for people who are resident but not domiciled, they are only liable to Irish capital gains tax, right, on disposal of assets insofar as they remit the proceeds into the Republic of Ireland. Going back to my friend from New Jersey, if he disposes of that property in Weehawken and makes a gain on the property in the United States, they will only be liable to Irish capital gains tax if they remit the sales proceeds into the Republic of Ireland. Don't remit the proceeds, not liable to Irish CGT. So again, in terms of the treaty article, most countries want to tax property in their backyard. Other than property in a particular jurisdiction or shares deriving the majority of value, right? Then CGT only applies in the country of residence. The other tax that somebody coming to the Republic of Ireland has to be very mindful of is capital acquisitions tax. So our capital acquisitions tax deals with gifts and inheritances. So in Ireland, as you can see there, it's an acquisitions tax. So the likes of, the United Kingdom and the United States of America, right? It's an estate tax. It comes out up the top, out of the estate. In Ireland, it comes out gross, right? Okay, out of the estate, and it's the beneficiary who's responsible for the payment of the tax. So what brings you within Irish CAT for the beneficiary is if the giver, right, the person making the gift or the inheritances is Irish resident or ordinary resident, or the beneficiary is resident or ordinary resident, or there's Irish assets being transferred. So any one of the three brings you within Irish CAT. But there's a special rule in relation to people who are not domiciled. So for the purpose of that CAT test, they will not be considered resident and ordinary resident for the purpose of establishing this CAT scope, right? Until they've been 5 consecutive tax years resident in the Republic of Ireland. So it's something that's really important, again, in relation to planning, you know, in relation to someone coming to the Republic of Ireland. After 5 consecutive years of tax residence, right, you have to basically be very mindful of the CAT implications in the event of a gift or indeed an inheritance. Okay, so again, in relation to the keys, in relation to it, you know, lots of opportunities in the Republic of Ireland, particularly for people who are resident but not domiciled. Okay, like all areas of tax, right, it needs to be carefully planned, and there's plenty of benefits in terms of a careful tax plan in terms of coming to the Republic of Ireland. Thank you.